Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today I know we're going to cover another one that is a little controversial, Target, some of the recent political issues out there, and I just want to get this out in the open. I am not team red, team blue. I am an independent. My money is green. It does not see red or blue. It sees opportunity, and whenever there is opportunities or potential opportunities, I'm going to investigate them on this channel to see if there is any value there. That is what I do. I am not here for political commentary. Leave your politics at the door. This is an investing channel. And if that is something you can't handle, then find another channel or just avoid this video altogether. I am going to cover some things that might be controversial to other people, but it just is part of the life and the world we live in. So I am going to cover Target today. It is August 23rd, Wednesday. This is a retailer out of the consumer discretionary sector. And if you haven't done so already, go ahead and help me out getting to 1,000 subscribers. We're pretty close, heading to 1,000, but I need your help. So hit that subscribe button down below, hit that notification bell so you're notified whenever we put out any new content. Help me get to 1,000. Join the Vested Interest community, building a community of like-minded dividend growth investors here to share our experiences, share stocks like this one, whether you're Republican or Democrat. Regardless, I'm going to continue to do what I do, and hopefully you find value, and hit that like button if you do find value. Let's jump right in. So if you want to know more about this company, www.target.com. That's www.target.com. That is their homepage where I pulled this information from. Some fast facts. Target is a general merchandise retailer with stores in all 50 states and the District of Columbia. 75% of the U.S. population lives within 10 miles of a Target store. We employ 400,000 team members. Our tagline is expect more, pay less. We've been using it since 1994. Target CEO since August 2014 is Brian Cornell. Target also owns Shipt and Roundel. More to love. Target is headquartered in Minneapolis, Minnesota, its hometown since the first Target store opened in 1962 under the Dayton Company. Right, and this is a retailer where you can find your groceries, a lot of household goods, a lot of apparel, women's and men's apparel, kids apparel, babies goods, diapers, home furnishings, patio and garden furnishing, kitchen and dining equipment, beauty material, video games, toys, sports and outdoors, Apple appliances, groceries, household essentials. All right, so your typical retail store, it'd be like a Walmart, or again, here where I live in Michigan, we have another store called Meijer's that would be very similar to a Target. Let's keep on going here. And the reason we are looking them down 1.38% on the day, we are talking about Target Corporation, ticker TGT, again out of the consumer discretionary sector, closed out the day at $123.21. And this company has really been hit hard. 52-week range as low as $122.64, so right up against their 52-week low, and as high as $181.70. Average volume 6.3 billion. Today's was 4.4. You can see that sell-off throughout the day. Market cap of $56.874 billion, a beta of 1.01, so slightly more volatile than the overall market. Price to earnings PE ratio of $16.92 per share. Earnings per share EPS is sitting at $7.28 per share. That's very high EPS for a retailer. Earnings date November 15th, so look for that coming up. Forward dividend is $4.34. They are a quarterly payer. We will see that here in a little bit. They have a very nice dividend yield, 3.4%. Ex-dividend date was August 15th, so we just passed that one. It looks like they're going to pay out on September 10th, so you would not be in line for this September 10th dividend. You would have to wait for the following if you were to buy them now. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to for information. They have a target estimate of $151.85. I like to get into the statistics and look at dividend yield theory to see if there is some potential undervaluation here. So to do that, we go over and look at their 5-year dividend yield average, which is 2.25%. We compare it to their current 3.4%, or over here where it says forward annual dividend yield, and you just click on statistics, go down to dividend splits, find all this information. And it currently sits at 3.4%, so much higher than their 5-year average, which speaks to some undervaluation, at least according to dividend yield theory here, and considerable undervaluation according to the theory. Payout ratio is 59.26, so under the 75% that I look for in these, with a lot of room to continue to increase this dividend over time. Now, I also like to get into the financials, and you should too. And a lot of good information here. You can find their balance sheet. You can find their income statement. You can find assets over liabilities. Is their revenue growing? That's all information you want to check. Are they paying down debt? Are they accruing debt? Are they buying back shares? All that information will be found under the financials tab. And one of the other things I like to look at there is free cash flow. We want growing free cash flow over time because we want growing dividends over time, and they pay their dividends out of free cash flow. So we'll look at free cash flow down here. 2020, 4 billion, a little over 4 billion. 2021, 7.8, big jump up there in 2021. 2022, a bit of a drop, but this is similar to what we looked at yesterday. Repurchase of capital stock right above it, see? And you'll see 1.5 billion shares there, 745 million shares in 2021, and then a big repurchase of shares here in 2022. So even though free cash flow dipped a little from 2021 to 2022, a lot of that can be accounted for in this repurchase of shares. And that is a good thing. Anytime a company is repurchasing their shares, especially if they're undervalued at the time, that makes you, and regardless of whether it's undervalued, if they're repurchasing shares, it makes you more of a shareholder whether you add more capital or not. So I like it when companies are buying back their own shares. Now, so far in 2023, they've reported negative free cash flow, but they are still buying back shares. So I'm wondering if part of this negative free cash flow isn't the repurchase of these shares. And again, if that is the reason, I am fine with the decrease in free cash flow, but we'll have to watch and look at this one and make sure that we're not seeing a decrease from 2022 to 2023. So overall, I'm seeing growing free cash flow from 2020 to 2022, and a lot of that decrease from 2021 to 2022 can be accounted for with these repurchase of these shares right here. Now, I always recommend more than one source, so stockanalysis.com is another one that I like. You pick any sources that you like. Just make sure that you are, Seeking Alpha is one. Some people like Microsoft, Google. They all have their own platforms, but just make sure you're picking more than one so that you can back check the information that you are getting is accurate. I like this one because of the way they present the information. And they have some stock analysts that take a look at this, and 27 stock analysts call it a consensus buy, though it's right there on the edge of a hold. And if you were to get in here on this web page there at stockanalysis.com, you'd be able to tell how many of these 27 analysts call it a strong buy, how many call it a strong sell, a hold, a strong or a buy, and then a strong buy. So strong sell, hold, strong buy, or buy and strong buy. You could see that how many of these 27 if you were to go to this page. Now they have a low estimate of $120. Creeping close to that low estimate. If it was to hit their low estimate, that would be a new 52-week low. They have an average estimate of $154.78, which is pretty close to what we saw from Yahoo Finance. That would be a 25.62% increase from where it currently sits. And if it happened to hit their high of $195, that would not only be a new 52-week high, that would also be a 58.27% increase in the stock price from where it currently sits. And all the while waiting for it to hit this new high, you could collect that 3.4% dividend yield. Now, under financials, they're going to give you the same information you can get from Yahoo Finance, just in a little different format, and they go back a little further at stockanalysis.com. Statistic is another one that I like to look at. I like to look at return on invested capital and return on equity, ROE, return on equity. I like 10% or better or in line with their industrial average. So you could compare this to some companies, again, like Walmart, like Myers, like some other retailers out there. And it's pretty comparable, though it does not meet the 10% or higher that I like. 6.96% on the return on equity, 2.77% return on invested capital. That's pretty low for me. So this one would be a strike against them overall. Let's see how their dividend is growing. And it is growing very fast, 14.81% dividend growth with a 60.44. We saw 59% and some change from Yahoo Finance. So we'll call it 60% payout ratio with a dividend growth of 14.81%. So very nice dividend growth on this one and still under the 75% payout ratio that I like. So they have some room to continue to grow this over time. Went back to 2020, 68 cents. They raised it up in August 17th of 2021 to 90 cents. August 16th of 2022 to $1.08. And they've already reported out they're going to raise it up that August 15th, which pays out in September, right? September 10th is when it'll pay it out. It will be paid out at $1.10. So very nice dividend growth over time. Free cash flow looks good. The metrics on this one overall, setting the political issues aside and your personal feelings, overall, the metrics, the numbers look very good for this one. It does look like it is presenting some value right now. If you are looking for something in the retail space, it may be one to take a look at. This is the vested interest stock screener. This is also how I set up the videos and how I look at a company on a high level to see if I am even interested in investing. If it meets 4 of the 7 for non-financial companies, 5 of 8 for the financial companies, then I will do a deeper dive into the company and look at some of the other metrics, the revenue growth, the overall income and balance sheet, and then I'll do a discounted cash flow analysis on the company. Well, that is it for this one. That is Target. Let me know what you think down in the comment section below. Please keep your politics out of it. And again, this is not a political channel. Let me know what you think of the company just as a company or where it sits right now. Are you seeing any value there? These are quick hitters trying to find value in the market for you. That is why I do these videos. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors. And like I said, headed to 1,000 subscribers. So really would appreciate it if you help me get there by hitting that subscribe button and hit that notification bell so you're notified whenever we put out any new content. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company or stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, and money to never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.